Hello students, let's start with a new chapter which is employment income. Just like in other chapters of F6, let's first take an overview of the pro forma of how we will calculate our taxable employment income. And then after we will see the rules in depth. Firstly students, we have to add all the income which are received from our employer like salary, bonuses, other benefits, etc. And then students, we have to deduct the allowable deductions which are as follows. At the last students, we have to make an adjustment of any redundancy payment received, and then we will get our final amount of taxable employment income. So now see the other concept of this chapter, and the first one is students employment receipt basis rules. Now what is the meaning of employment receipt basis rule? It generally determines the basis period of your employment income. Yes, it generally determines the basis period of your employment income, like in which tax year the income from the employer should be taxed, like in 2018-19 or 2019-20. In which tax year you will be taxed. That will be determined by the receipt basis rule given over here. So for the employee students, we have to see the payment date and entitlement date, and whichever will be the earlier will decide the basis period of that income. And with the case of the director students, we have actually the 4 options, and whomsoever will be the earlier will decide the basis period. The first one is student is the payment date, then entitlement date, then recognition of that liability by the company, and the last one is that letter of the year end and determination date. Whichever date will be earlier, I told you, that will be the basis period for that directors. Now the next concept is students the approved mileage allowance. It is paid by the employer to employee in the case if employee have used the personal vehicle for the business purpose. So here the HMRC have given the standard rate of the allowance that employer should give to the employee per mile. But if suppose students employer is giving more than the standard allowance, then the excess amount will be taxable under the employment income to the employee. And if the employer have given the less than the standard allowance, then the shortfall will be allowed as an deduction from the pro forma. Student, the new topic is exempt benefit. These are the benefits which are totally exempt from the income tax, and we don't need to do anything, or we are not required to give any kind of treatment of these benefits. But the list students is very lengthy, so I have not written here, but you can find the full list from our comprehensive notes or any other material also. Now we have this list of the students exempt benefits. So any kind of benefit which are not in the exempt list will become the automatically taxable. So now let's see the concept of taxable benefit. For taxable benefit, there is a general rule and there is also a specific kind of rules for some benefits. But students, before going into any of the concept, there are 2 rules which will be applicable for the taxable benefits in general. Right? So these rules you have to take care in each and every kind of taxable benefits. The first rule is students that the benefit may given for only the part of the year. Then benefit should also be time apportioned according to the period for which the benefit was available. That means that the taxable amount is coming for the 12 months, but you have given the only benefit for 6 months, though, so you have to proportionate the total amount according to the 6 months. So suppose taxable benefit is 10,000, so 10,000 multiplied by 6 divided by 12. That kind of time apportionment you have to do. And second rule is students that if the employee is making any kind of contribution for the assets or benefit, then the contribution amount should be deductible. Right? Here also students, in this rule, in the second one rule, there is one exception, but that we will see on the later on. Students, now I told you there are 2 kind of concept in the taxable benefit. First one is the general rule and the second one is the specific rules. So let's first of all see the specific rules first. At the last we will see the general rules. So In the specific rules, the first benefit given over here is students living accommodation. There is a simple pro forma given here to calculate the taxable benefits in the case of living accommodation. We firstly have to take the annual value which will be given in the question, and the annual value is nothing but the expected annual rent from that accommodation. Then we have to add the additional benefit, but only students if the cost of accommodation is more than 75,000 GBP. Otherwise, we can directly deduct the proportionate amount for unavailability of the house, and we also have to deduct the any contribution, or we can say any partial rent paid by the employee. Now students, let's say with that, if suppose the cost of accommodation is higher than 75,000 pound, so we have to calculate the additional benefit amount in that case. We firstly have to compare the purchase date and the provision date of the accommodation. If the difference between those dates is less than 6 years, then we have to first add the purchase price and the capital improvement amount. And then we have to deduct the fixed amount given over here is 75,000 from the total, and then we will get the final amount. Now, you will say that, sir, the final amount is additional benefit. No students, additional benefit is not yet arrived. You have to take that final amount, multiply it by 2.5%, and then you will get the additional benefit amount, right? Now, what if the difference between the two date is more than 6 years? Then in that case, we have to take the market value of provision date instead of the purchase price, right? And then we have to add the market value and the capital improvement amount, and then once again deducting the fixed amount of 75,000 pound. Here also students, additional benefit will be the final amount multiplied by 2.5%, right? Now students, what if the accommodation is rented by the employer? Then it's very easy to get the taxable benefit. It will be higher of the rent actually paid by the employer or annual value. In this case students, additional benefit will not arise, so don't worry about it. Now, if suppose students any kind of lighting or heating expenses are paid by the employer, then that will be taxable separately. Now students, let's see the next concept is, if the accommodation given is the job related, then it will be exempt benefit. But students, you must have question that, sir, what is the meaning of the job related accommodation, right? So students, let's see that any accommodation given for the purpose of proper or better performance of the employee's duty, then we can say that it's a job related accommodation. And students, accommodation given for security reasons will also be considered as job related. So here students, the accommodation benefit is completed. Now students, let's see the next benefit, which is car benefit. There are two possibilities in the car benefit. Either it can be the pool car or it cannot be a pool car. That means a pool car or not a pool car. So students, if it is a pool car, then it will not be taxable. It will be one kind of exempt benefit, right? We don't need to worry about anything. But once again students, you should have a question like, sir, what is the meaning of that pool car? So to become any car, to be a pool car, it must satisfy the three conditions. The three conditions are, students, it can be a pool car if it is provided to more than one employee. Then any private use is incidental, and it is not normally kept overnight near the residence of any employee. So it's very simple students, that if employee is providing a car and it fulfills above all the three conditions, then it will become a pool car, and so it will not be taxable benefit for the employee. But students, now let's see that if suppose a car provided is not a pool car. To calculate the taxable benefit in this case, we have below pro forma given, so you can derive the taxable amount according to that. One more thing is, student, any additional benefit will not arise for the cost of insurance, repair, maintenance, etc. It is all included in over here in the pro forma. But if students, the chauffeur, that means the driver, is provided for private use, then additional benefit will arise. Now students, in the pro forma here, they are asking you to multiply adjusted list price with the CO2 emission rate. So let's see that how to derive that adjusted list price for the car. List price is nothing but the market price including the taxes, but students, excluding bulk discount. Then we have to adjust that list price with the cost of additional accessories and capital contribution made by the employees. Students, here please focus on the capital contribution, right? Then students, capital contribution has the maximum limit of 5000 GBP. So it's all over students, car benefit is over. So now let's see the next benefit, which is fuel benefit. It generally arises when employer pays the fuel cost for private use of the car. Employer have given you the car, then a car benefit we have discussed already. But if suppose students, employer is giving you the fuel also, then let's see what will be the benefit. The calculation of the fuel benefit, students, is very simple, and the formula is also given over here. Students, we usually in every benefit deduct the amount of contribution made by the employee. Here students, if employee reimburses the full fuel cost, then there are no fuel benefit. If suppose the fuel cost is £5,000 and employee is giving you full £5,000 as a reimbursement, or a full fuel cost is given back to the employer, then it is very obvious students that no benefit will arise, right? But if students, employee reimburses the partial fuel cost, then student, full fuel benefit will arise. This is one kind of student exception which you have to remember. If students, the car is not provided for the whole year, then also the benefit will be taxed according to the proportion of the period given. If suppose students, car is used by more than one employee, then also the benefit amount will be divided equally among the employees. Now let's see students, if the employer has provided the van to the employee for private use, then what will be the taxable amount? Taxable amount is given very simple students, 3430 pound per annum for the van given, and if employer is giving you the fuel also for that van, then 655 pound is given. Here also students, if van is used by more than one employee, then benefit will be divided equally. Now students, we have seen many rules for taxable benefit of different assets like car, van, accommodation, etc. But what about the other than those assets which is not yet covered? So for any other asset which is not yet covered, we have general rule available here students. So let's discuss the general rule. The general rule is saying that taxable amount will be higher of 20% of market value when provided or the rent paid. Right students? Students, sometimes employer give asset not for use, but employer sometimes gives asset as a gift permanently. Now, if employee is getting the asset free of cost, then if we think logically, then full value of asset must be taxable to the employee, because if you see that employee didn't incur any kind of cost and he got the full asset permanently, it is free of cost to the employee. So it is very logical that the full value of the asset will be taxable to the employee. So if employer gives a new asset to the employee, then cost of the asset will be taxable. And if suppose students, a second-hand asset is given, then market value of the asset will be taxable. In some cases students, employer first give the asset only for the use, but then later on give that asset as a gift. Then in that case, we have to calculate the taxable benefit as below. Students, you have to remember the below rules. I am giving you 10 seconds to just go through the pro forma. Thereafter students, beneficial loan. It can only arise if employer gives loan to the employee. at an interest rate which is below 2.5%, and the total amount of loan should not be less than 10,000 pounds, students. Right? We have seen this condition in the exempt benefit list. In the exempt benefit, that is was clearly written that any kind of loan given to employee below the amount of 10,000 pound will be exempt, right? So here we will talk about only loans which have the value of more than 10,000, and not only just that rule. If the suppose the loan is 20,000 for the 20,000 pound, then we have to see that what is the interest rate. The interest rate should also be less than 2.5%. Then only the taxable benefit will arise. So students, if employer given the loan at a 1%, then the taxable benefit will be the difference between 2.5%, which is the standard rate, and 1%. So we can say that the benefit will be at the rate of 1.5%. If students, employee later on do not repay the loan, and so company write off that amount of the loan, then the total loan amount will be taxable to the employee. So here students, almost the full chapter completes. We will see the next chapter in the next lecture.